Welcome back, Alpha Hunters. Hope everybody's having a very fantastic finisher Friday to this week. What do we have here? Let's kind of talk about this. So, yesterday when I got off the mic, it was about like right here. And first off, you can tell I fixed whatever issue I had to keep it from scrolling back in time. I actually just fixed that like 2 minutes ago before I got on the mics. So, simple as unplugging the USB adapter to my mouse and plugging it back in. Who would have thought? I actually think there was a software update for another software program that messed this up, but hey, we're good. So yesterday when I got off, market wasn't doing too bad. We had bounced there midday. Okay. Shortly after I got off, though, we had a pretty strong rollover. We went down to got the daily lows on the SPY. And real quickly, look at this, the Qs as well. And then the last 30 minutes yesterday, nice strong rip back up to kind of where we had rolled over from. And if I was on the mic yesterday, I could have sent out a tweet, but basically I would have said, if we take out this low, that'll probably be the end of it. You could probably just move your stop losses up to this low because we had already seen some decent amount of selling here the past 2 weeks. Had stopped going higher, and it was like the last hurrah. But basically, I was saying, like, if we were gonna break this low, like that would be, it's probably over, probably in for a correction, probably the start of it. So we'll take a look at the Qs. I'll show you that here in a sec. But we had a nice gap down today. Kind of talked about yields yesterday, man. They were strong yesterday after that PPI number. Today we gapped down 0.9%. Let's check the mark extended hours. So, yeah, I mean, we kind of just traded lower kind of all night. We have this little gap down here because the SPY doesn't trade all night like the futures do. We have this, so the futures actually continue to trade lower than the night, and then they got bought up early morning hours, and then they rolled over, and then I was kind of seeing a nice little drop there as we, just before we start the actual trading day here on the SPY. Kind of continued a little bit of the rollover, nice bounce there mid morning, going into roughly that second 30 minutes or so, and then just a long 2 hour kind of sell down, 2.5 hour kind of sell down. It's about 2 hours. And then that was kind of the daily low. It was about an hour ago, and we kind of had a nice little, at least bounce off that low for the past hour. And here's take a look at the Qs. You see the red line here, the Qs. Nice gap down, traded lower, bounce, prolonged sell down, past hour bouncing. Not looking too indifferent from the SPY. IWM, nice gap down, traded back higher. Been kind of choppy, though, throughout the day. Been kind of choppy. Sell down, bounce. Choppy, sell down for about 2 hours, and then bounce here for the past hour. DIA, gap down. Roll over, bounce, and then just rolled over. And hasn't bounced as hard back up here over the past hour, but it is off the session lows. RSP, strong gap down. I don't really know if I would believe that gap down, but just because RSP is not as liquid as some of the others, but they do a very important job of telling us kind of what's going on across the general stock market. Anyways, nice little gap down, pump tire. Got back to positive kind of twice today. Initially, right here, this wick. And then here, about an hour after the trading day, we were positive for about, it was like about 20 minutes, 30 minutes or so. But we had that nice long pullback for about 2 hours, and nice bounce for about 30 minutes, and it's kind of been flat here for about 30 minutes. So that's a look at the RSP. Take a look here at the daily RSP. Looks false breakout-ish. So obviously we know we've had this long run double top type pattern possibly looks pretty good. We had a pretty good breakdown yesterday. Obviously, continuing a little bit today. Well, we did have a little bit of a bounce yesterday with that lower wick, but we gapped down to that low there yesterday. All we really could have done is retested into that 10 daily EMA and also this support and resistance line that we got here. So if that is the retest, and then we look to trade lower, yeah, I mean, that's just going to be a double top. We broke down that neckline of that double top, retested that neckline, and how, yeah, I mean, it would look pretty good. I mean, it would be a very quick one if that was to be the play here, but to say that that's not the play, well, time will tell, I guess. DIA, the Dow Jones Industrial Average, slowly, I mean, it's been a slow grind to kind of break down that 20 EMA. This looks like we're going to break it down this time. We hit a nice bounce off the 10 and 20 yesterday, kind of getting through them and then bouncing towards the end of the day yesterday. But gapping down below that lower wick today with a retest higher. Definitely just says it looks like we're probably going to roll over here, at least make it down to the 50 EMA, which would probably be around the 380, 350 level. So about 3 points lower, be my, looks like about the play there. IWM, yeah, IWM, man, just had just a bad false breakout as well. A lot of people were like praising praising the broadening of the rally, and I kind of mentioned it before, or we've talked about it before on this channel. Like, I don't know if that's necessarily what you want to see, as like you want to continue to see the things that should lead, and not things that everybody's been saying is priced correctly start to lead, because that just means people don't know what to invest in. They're not comfortable putting money to work in the things that are at extreme valuations, so they go chase something else, and it doesn't mean that those things that they start to chase are worth a damn to chase at that point. Anyways, but you do have this little head and shoulders type action here, false breakout, and now we broke down kind of yesterday, a huge breakdown yesterday on IWM, bounced back to that neckline today, which is also where that 20 EMA is on the daily. So could be breaking that down. Oh, let me get rid of that. There we go. All right, Qs. All right, so the Qs. So we know the Qs have stopped really grinding higher, and it's kind of that whole seeing other things work here over the past like 2-3 weeks. Not to say it's not a good thing, but I mean, it's also, do you really want to, hold on, do you really want to see other things work when there's no justification for them to work, I guess. That's kind of the problem. That's kind of the thing that, we've talked about before in the previous couple of weeks. But we're seeing the Qs break down, okay? So like I kind of mentioned when we were looking at the intraday, yesterday's low was good. To me, that was going to start to be the line in the sand as we were starting to breach below that 20 daily EMA. And I figured if we got below that low yesterday, we're probably definitely breaking that 20 EMA down. Well, we gap below it today. So to me, even that fact that we gap below that level yesterday, to me is pretty important psychologically. Like, hey, I would be planning for a little bit further of a pullback, probably looking at previous all-time highs, somewhere around the 412, 405 type zone down here. That'd be my kind of guess. I mean, you're probably looking for a quick pullback to this 50 EMA here. Probably next week. Probably the mid 420s makes sense. And then maybe we pause there and then we kind of roll over again. But I think this will probably trigger an actual pullback, actual period of dip buying, a legit dip buying opportunity. SPY, and I'll talk about a little bit more down the line right now. But SPY, kind of same thing. Although I wouldn't have moved the trigger up to below yesterday's low. Just mostly would have done that on the Qs, as the Qs have just been holding on to that 20 EMA here over the past couple weeks. But yeah, you can see the SPY kind of clearly breaking down today, and it's going to be very tough for the SPY to go higher or do anything without the Qs, just because the Qs have so much of the market cap weight. So, yeah, I would imagine the SPY probably winds up seeing, a pullback from here as well. And everybody's been clapping on this broadening out, so that'd be about 5.8% pullback from the for the SPY from our current level. Qs be about a 5.8% pullback. So will they both pull back the exact same amount? I doubt it. So that'd be interesting to see, because yeah, that ain't gonna happen. They're not both gonna pull back 5.8%. Usually the Qs will pull back like 7%. The SPY will pull back like 5.5%, something like that. But after that, I think we will clearly retest this level, the previous all-time highs. We will get a bounce, and then that's going to be the interesting spot. And when I get to yields, I'll probably talk a little bit about that, because it'll depend heavily on yields. It's going to depend so much on yields over the next maybe couple months. Will depend if we come back up and take out the all-time highs that we just put in. Maybe we don't. It's going to depend on yields. Yeah, because if yields continue to climb higher, that will, I mean, it's going to be really tough for the market to shake that, especially if they start to climb back to like 4.5, over 4.5%, start to make a run up to the high fours, maybe 5. I'm not thinking that we'll get there by, maybe the end of April. I doubt it. But I mean, if we just continue to climb it up to like 4.5 and show like we're showing support, we're going to continue to climb up to 4.5 plus throughout April, then yeah, I could see the SPY have a bounce at the previous all-time high, bounce, and then it roll over later as we go into maybe April, May. But oof, I think that's what it's going to come down to. I think it's going to come down to yields. VIX moving higher nicely 2 days in a row. It's crazy. We're not seeing no catastrophic spike higher in volatility like we did back in February, but okay. Dollar also continuing to push higher here. GLD, yeah, I mean, gold's just kind of hanging out, not really doing a lot. I mean, it's down a little bit, but for how much it moved here the previous couple of weeks, it's just kind of hanging out. Kind of a nice little flag pattern to it, actually. So, GLD hanging out, man. Yeah, we talked about yields a little bit. Yields look pretty solid here. Look pretty solid. How much is that 30-year rising? So 30 years flat. Okay, so the 30 years flat. I mean, it looks pretty bullish. If you saw that on a stock chart, you'd think that's pretty bullish. Nice strong day yesterday. A little bit of a lower wick, kind of doji day-to-day firefly candle day. So, I mean, that looks pretty bullish to continue higher there for yields. So that's the long term. And then the short term's moving higher as well. Like, that's, to me, the part that the market doesn't think is going to go higher, right? I mean, the market is clearly thinking, like, hey, the second half of this year is going to be about cuts. And really, the Fed's been, hey, the second half of the year might be about cuts. The market's been thinking, hey, we're going to be getting cuts at the end of Q1. Well, we're now at the end of Q1, and now the market's starting to think we're going to get cuts at the end of Q2. And if yields continue to go higher, well, we ain't going to see no cuts. We ain't going to see no cuts. HYG, anyways, 10-2 inversion, not really doing a whole lot. Just kind of hanging out still. Honestly, the 10-2 inversion really starting to look like it's basing in here. So unless we see a drop-off, like a strong drop-off, like we are probably into a basing period. there on the 10 and 2 inversion. HYG, hey, yeah, had a pretty good breakdown day yesterday. Kind of bounced a little bit today. All right, looking okay. Just kind of hanging out. LQD also hanging out. Man, it's so nice to be able to move charts around. LQD just kind of hanging out, not really doing a whole lot there. TL tier, yeah, it's hanging out. It's hanging out. Not really doing a whole lot. All right. Is it IGV? Yes. All right. I had to check something. I want to talk about something a little bit later. So yeah, I mean that's kind of the way the market's kind of running. How the transport's looking. Ooh, transports. I haven't looked at the transports in a while. IYT here. You can see I got flat for the end of February. Had a little bit of volatility here at the beginning of March, but didn't really go anywhere. Just kind of some volatility around. Then had a pretty good breakdown day yesterday. Doesn't look super strong today. Kind of at its session lows. It's not as liquid as some of the other things, but it is a transportation. Kind of tracks a lot of the transportation stocks and stuff like that. So yeah, it's not looking all that great. Let me see if Dow Jones, transportation equipment, transportation index. I want. That's fine. I don't. That's fine. Let me see. NASDAQ transportation. NASDAQ. U.S. Smart Transportation Index. No, I'm looking for like an ETF. There's another one out there that's a little bit more popular, or it has more volume. I'm not gonna say it's more popular, but I don't really know if it's all that more trustworthy. But I can't find it. First Trust Transportation ETF. Let's try this. Yeah, I mean they kind of got the same thing. They've been a little bit more of an uptrend there at the end of February. They've been trading lower here to start February, March. But yeah, I mean having that breakdown here recently. So yeah, I mean there's some signs out there that don't really don't look all that great. How's the XLF doing? This has been like one of the best sectors here over the past 4 months. XLF is kind of flat today. It's not looking too bad. Which, speaking of, let's take a look at that sector rotation. So I didn't really see that yesterday. So sector rotation, yeah. I mean, you would expect it. XLC or XLK tech at the lower end of the day. You also got communications and discretionaries also lagging, pulling the market down. Everything else is outperforming. You got real estate and healthcare barely outperforming there. Utilities, financial staples, outperforming a decent amount. And you got industrials outperforming as well. And then you get energies and materials that are actually positive on the day. They're actually the only two sectors that are positive. So energies look like they had a pretty strong start to the day, but have faded throughout the day. So they actually might not be doing all that great intraday. Yeah, it doesn't look like energies are doing all that great intraday. Just had a pretty good gap up today. Discretionaries, communications have not been trading well during the day. Tech hasn't really either, but it's actually been doing okay compared to, I guess, the gap down it had. Yeah, you can see energies underperforming there. Utilities, real estate, financials, healthcare, industrials, staples, all kind of underperforming there on the intraday. And you got materials that's really the only one outperforming there to start the day, which doesn't really make sense. So let me take it from there. Yeah, that makes a little bit more sense. As far as like outperformers, underperformers. So let's go take a look at energies. I'll tell you what, see from yesterday, from the start of yesterday, because really we've seen selling here over the past 2 days. Energies over the past 2 days done very well. Real estate has not. Discretionaries and tech, communications have not, which is going to drag down the market. Everything else is kind of just slightly outperforming or outperforming a little bit. So let's go take a look at energies. So crude is crude. Yeah, 2 days very strong. The move on Wednesday, we know we kind of looked at that. That was kind of in response to an EIA report, which is the energy. I I don't even know what the middle initial EI. I don't even remember what the I stands for. It's some agency, energy something agency. I don't know. Anyways, but also probably the bigger news that came out of that made this move happen on Wednesday was Ukraine was bombing some Russian refineries or something like that. So you had 2 days of popping here. So Wednesday and Thursday, nice little pop there. Friday, kind of just hanging out, not really doing a whole lot. We're about to have contract roll, which when we come in on Monday, we'll have contract roll. So we have a new contract here on crude oil. So we're currently trading around 81.19. The new contract will have a little bit of a gap down of about 50 cents. So expect to see that on the spot contract on the CL1, whatever the spot contract is. As this April contract goes away, we'll bring on the May contract. And yeah, we'll probably just be about 50 cents lower. So there you go. So that's crude. How is gasoline? Gasoline continuing to motor it higher. What about heating oil? Heating oil hanging out. Okay, so heating oil not pushing up as strong, but yep. Gasoline's still looking solid. Solid. You got okay. So energies are doing pretty good. Let's run through a couple energy stocks before I look at big tech. Nice upper wick there on Exxon. Nice pump to start the day, but it faded for a good part of that morning. And then Chevron also throwing a pretty good upper wick. ConocoPhillips, not fading all the way back down as bad, but don't definitely off the session highs. Kind of halfway in between the low and high. Marathon. This is the oil side of Marathon. Nice little upper wick there. This is the refinery side of Marathon, looking really good. Here's the Valero. They're looking really good as well. So the refinery companies are looking really solid. Up 3.6% today. They're on Valero. So let's take a look at big tech. AAPL. Nice gap down. Not really too indifferent from its gap down 1.1%. Microsoft, though, is getting hit pretty good. Microsoft's down 2.5%. Alphabet down 1.5%. Meta could be setting up for a pretty good break. Down 1.6%, breaking this 20 daily EMA. Be the first time from its earnings. And we got a pretty good pocket here of about 10% or so. Let's see. About 7.5%, I guess. It's about 40 points. This thing can move. And yeah, down to that 50 daily EMA, which would also kind of correspond closely with these lows, depending on how fast it did it. So if it did it all next week, then yeah, we could probably get down to these lows from its earnings, and then that'd also be where the 50 daily EMA is. So that could be interesting. Amazon breaking down 2%. Tesla with some breakdown days. Well, we very quickly went from 170 to 160. Yeah, kind of mentioned that 2 days ago. Really kind of a bummer we couldn't look at some of these stocks yesterday. All right, I just had a hard time with TradingView yesterday. 170. Yeah, we just had that breakdown there on Wednesday. and we were kind of talking about it, man. It's just going to quickly go from like 170 to 160, and it's basically gotten to 160. It's gotten to just below 161, and it's going to start to get. It'll probably go lower. It'll probably go lower, but it's going to get choppy. It's going to get into just a zone where people are going to start to step in to buy it up. The buyer zone, and yeah, there you go. So, Nvidia though is still holding on to the American dream, up 1.33%. You can see that first hour of the day looking at least pretty strong. Since then, not so much. AMD, they got bought up today. So semiconductors are back to getting bought up. Yeah, AVGO's down. A lot of tech in red. Ooh, a lot of red in tech land. I was about to say a lot of tech in red land. But, I mean, that also makes sense. A lot of tech in red land. Yeah, Intuit. And if you don't know why probably a lot of tech is getting hit, if you see right here in the middle, Adobe's down 14%. They had earnings last night. Let's take a look at that. Basically, they said that, yeah, there's a lot of demand for generative AI stuff, but they also lowered their forecast. So there's a lot of demand. They lowered their forecast. You know what that means? There's just a lot of competition out there. And this is going back to some of the things that, we've kind of mentioned before about it's AI right now. These processing chips that NVIDIA is getting out there seems to be the great equalizer. To me, it's the great equalizer on software development. That's how I look at AI. It's the great equalizer. You no longer have to go to a lot of these software specific companies to get things done for software development, and the more things that AI is going to be able to code, like the less power a lot of these type of any company that has packaged software next to its name or sector, it's going to really kind of to me not make them as powerful anymore. They used to just say, hey, we're going to hire all the software coders we can, because then people had to come to you for anything they want to develop for software. But if now AI can do that, and you don't need those people. So, anyways, Adobe did not have a great talking about its future prospects, and that's why it gapped down pretty good. They did beat on earnings. They beat a little bit on revenue, and they beat on bottom line a little bit over 2%. So like they didn't have bad numbers on the quarter. It was just they got hit pretty good because, future guidance on revenue, and just it's demand. It's not demand. It's competition in the market space. It's all these companies are going to have the same problem. They're all competing with AI. It's not even their competition AI. It's even like small developers. I mean, it's so much easier now for small developers to compete in the world of software development, right? So much easier. All you got to do is get yourself the processing power. You got to get yourself some NVIDIA chips, and then that's the equalizer. It's been the first time in a long time, past like I would say decade and a half, 2 decades, where the software is being the hardware is outperforming the software. It used to be like during the 2010s. It was like all these companies during the 2010s. They were all like Uber, Airbnb, Google. They all trying to do all these self-drive AI adaptive framework software models, pricing models, and all that kind of stuff for their businesses, like Uber and Airbnb is kind of what I'm mentioning about, or adaptive pricing models. But during the 2010s, that's what a lot of them were trying to do. They all had these software ambitious programs, but a lot of them are just saying, yeah, we just don't have the processing power yet. Self-driving cars. I mean, we've been hearing about that for over 10 years, but they constantly have said we don't have the processing power yet. Well, now that we're starting to have the processing power, our you know, you can see what's kind of happening is they're literally are writing themselves out. So, Dr. CDW, do you think we'll have a pump before the close of the day? Dang, man. Why do you put me on the spot like that? I don't trade intraday all that much anymore. Mostly because it's not my thing. I wouldn't be shocked. I'll say that. I wouldn't be shocked, Dr. CDW. I would not be shocked. You know why? If you want to know why, I wouldn't be shocked. It's because that's the mantra. That's been the mantra, right? You definitely saw it yesterday on pullbacks. On pullback days, you get that strong dip buy at the end of the day. Like right here's another one. When you got like good pullback days, typically you got decent bounces like right at the close. Oh, here's a pretty good one. We had pretty good long protracted pullback. Even 2 days in a row, but that's a solid one right there. Back on February 21st, that's a pretty good one. So I mean, I wouldn't be shocked. I absolutely wouldn't be. We saw it yesterday, though. That's one thing that would kind of cause me to say maybe we don't, because we saw it yesterday, and then we got below it today, and then it might also correspond with yields and what people think yields might do next week. That would be my take. I don't quite have a solid answer on that. I still think there are dip buyers out there. I just eventually that dip buying activity stops. And if everybody's sitting on the same trigger, same alert levels, same kind of setups, then everybody kind of heads for the door at once, and then nobody's kind of buying dips anymore. Thank you. I definitely enjoy your videos. Well, thank you very much for that. Yeah, not meant to be complicated. Just meant to, be for the working person. Easy to update, understand. 10, 15 minutes. It's not complicated. Just want to help people, man. Just stay involved in their finances. That's basically it, man. Just trying to help people without spending like 2 hours breaking down every little freaking minutia. You don't need to break down every little minutia. Understand what the market's concerned about, and that's about it. There's a lot of things the market's been concerned about before in history, but it doesn't mean the market's concerned about it now. You just figure out what the market is concerned about. But yeah, I mean, if you guys have anything you want to take a look at, definitely let me know. I mean, I wouldn't be surprised if we do pump, but I also wouldn't be surprised if we kind of roll over. And I think that'll be the more clear definition for early week's next activity. If we do see the bounce, Doctor, I could see Monday, Tuesday kind of holding in strong. Maybe we just chop sideways or something like that. If we roll over, I think we would probably see some selling Monday, maybe Tuesday. I do think we'll have, if we do sell down like Monday or Tuesday, I think we'll bounce as we go into Wednesday's Fed Day. Yay, Fed Day. Doctor, what EMAs do you use? All right, so this is like my base chart is this one. This is kind of the one I look at. I also have another one here that has the long terms, the 100, 200, but very rarely do I figured out, very rarely do you really need to use the 100 and 200, but I have them there. I have them set up here. I just don't need to use them all that often. The ones I really need to use more often is the 10, 20, and the 50. So I have the 10 EMA, the 20 EMA, the 50 EMA. I do have the volume obviously down below, and the VWAP. And the VWAP is more for intraday. If I go to an intraday time period, you can see the VWAP line here. It's that really thin kind of line there. But other than that, that's just kind of more for my intraday kind of view, but it actually works very well for also my uh, my uh, my daily as well. If I zoom in, you'll see the VWAP. You'll see the VWAP. The VWAP is really more for the intraday, but you can see the VWAP kind of right here as it goes to the daily, the volume average price. It's really more of a day trader type tool. Right on. You said, how do you use the VWAP? I don't, because it's more of a day trading tool. I am just aware enough to know that traders trade off of it. And so understanding how a lot of traders think helps you understand how the market's going to react. Okay. If you are hugely deviated below the VWAP, like if you get substantially below the VWAP, let me do this. Let me get rid of that. I'm gonna get rid of all these moving averages so we can just see the VWAP. So how a lot of traders trade the VWAP is they will take small positions expecting to move back to the VWAP, especially like the VWAP's flat and you can see that we have this downtrend. Like the further that it gets away, the more enticing it is for them to say, "Hey, you know what? I want to start to add to small position, small position, back to the VWAP line." And they have some other, there's some other things like, hey, if it gets too far deviated, that's when I want to start adding to a position, expecting to move back to the VWAP line. Same kind of thing over here. You got too far. You might have got too far above it. They might have started adding to a short position to say, hey, I'm expecting it to go back down to the VWAP. Very rarely do they trade off the VWAP. There's sometimes, I know some traders that they have traded off the VWAP, but typically it's more of a trade back to the VWAP. So there you go. That's about all how I use the VWAP. I don't really use it, but I just know how other traders do use it. And so if I see moves that we're starting to head back to the VWAP, like that would be like if I'm going to, for instance, if I'm going to adjust a position, and it's not an intraday position, but maybe it's a daily position. But I see us, we're moving back towards the VWAP level. Yeah, I might not. It doesn't make sense to potentially buy a put position, down here or something like that. If I see that we're moving back to the VWAP, I'll do it at the VWAP, right? Same thing for calls up here. Like if I see we're moving back to the VWAP or a little bit extended from the VWAP, I might wait for us to come back to the VWAP and say, okay, I'll do it here. So yeah, it's that's about how I use the VWAP. Just understanding that I know how a lot of traders think, especially when using the VWAP. A lot of traders, intraday traders, who use the VWAP. So I don't typically, say I'm gonna use the VWAP to trade off of too much. I just more of say, hey, you know what? I'm gonna just wait for a little bit better positioning as we kind of correct back to the VWAP, and then I'll adjust my trades, that kind of thing. Maybe 1% better. Sorry, better approach the one-on-one. Oh, appreciate the one-on-one. Yeah. Not a problem. Oh yeah, that's what it's here for. That's what I'm kind of do the live streams for. Just kind of have, any questions. I mean, so and that's the other thing is like that's kind of the way I use VWAP. Dude, you go to another chat room. You might get someone that holds a totally trade methodology around the VWAP, right? Like, and that's perfectly fine. Like everybody's got their own way. Everybody's got their styles. I'm not an aggressive person during the 2010s and stuff like that. I used to be kind of aggressive in trading. Not as much anymore. I'm more of like I'm trying to just generate the cash flow, put them back in the cash flow I generate, put them back in the long term assets and that kind of stuff. And it just kind of all self feeds itself. But I use it as bullish and bearish signal. Yep. Oh yeah. As long as as long as it profit. That's very important. Do you use a trading journal or some way to track your trades, profitability, success ratios, all that kind of stuff? Because that's kind of highly important. And one thing I've told people before. Okay, so once you understand, how much money you can make in a trading strategy or using a certain strategy, is figure out when to turn it on and figure out when to turn it off. That is how you kind of generate some pretty good performance. Pretty good profits. I use the platform for performance. Okay. Okay. Yeah, I mean, as long as there's a good way to track individual trades, trading strategies. Like I have multiple trading strategies. I don't have them all on at the same time. Um, you got bullish ones. You got market neutral ones. You got bearish ones. And it's like if you oh, JPM. Okay, you use JP Morgan's. So yeah, if they you know being able to analyze each of your different trading strategies independently is a really good way to understand. Yeah, I mean, like when to have strategies on, when to have strategies off, when one doesn't start to work as much. Yeah, you need to probably just turn that one off because the market kind of goes through cycles when it works, when certain strategies work, when certain strategies don't. Typically, for me in a bull market, like buying off the 10 daily works, and then buying off the 20 daily works. That is like most bull markets, like like the 10 and 20 holds pretty good. I think I just moved that chart. Yeah, I did move that chart. I'm going back to this kind of bullish time period. So you can see like these bull runs that we had snapbacks back to the 20 a lot. This one actually back in 2021, we had a lot of snapbacks to the 50. Even back here in what is this 2019, you see some kind of was riding that 10 EMA up a lot. Had a snapback to the 20, riding that 10 EMA 20 some. A little bit of a pullback here to the 50 before we had COVID. Oh, COVID. So yeah, it's the hard part for doing that kind of trade is figuring out the take profit zones, and it's one of those. If you can figure out a decent, like, hey, I'm willing to let it ride maybe like 0.5% up above its previous high or something like that. I don't know. There's different ways. I play more of a vertical option every 6 weeks, as long as we're not too far deviated above the moving averages. Every week I just basically buy a 6 week vertical option on the calls on the SPY, because we'll just like slowly grind up over it over 6 weeks. I'm still trying to figure out which time frames to draw trend lines on. It doesn't matter. Yeah, it doesn't matter. It's the 3 5. Yeah, I mean you use the 10 minute, 15 minute. Yeah, if you're really set on intraday trading, you're probably looking for that lower time frame, 5 minute, 3 minute. I can understand that. So if you're doing that intraday trading, yeah. The problem that starts to come, so you always got to make sure you keep an eye on the long term. Always got to make sure you keep your eye on the long term. So make sure you just got to make sure, yeah, you just got to keep an eye, maybe like on the hourly, right? Make sure you're not too far deviated away from the moving averages, especially when you get gaps. Because if you get too far deviated one direction or another, the short term absolutely will not freaking matter. But if you're just riding, like if you're just like this little period right here, if you're just riding along that moving that 10 daily moving average, you can just see like we're just kind of slowly grinded out of there. The 3 5 minute probably worked perfectly during that time period. So yeah, it's one that. But if you get too far deviated like this kind of time period, we got some gap ups. We're a little bit extended from the daily moving averages. It kind of, you can see like one day we were just flat, and the next day we kind of pushed higher. The next day we had a doji. It gets kind of tough for the market to just continue to grind higher, especially the longer you go into like trends. Like we've been on a pretty good bullish trend for 4.5 months now, so it just eventually it gets tired, it gets exhausted. You know, if you look at a weekly, and like we haven't really touched that 10 daily or 10 weekly EMA. I mean, going all the way back to the base of the beginning of November. So I mean, that's a long time period to not hit that 10 daily or 10 weekly. So yeah, it's it's been crazy. It's like wow, wow. Like sometimes you just gotta appreciate the market for when it gives you really cool time periods like this. It's a really, this past 4.5 months has been a very rare time period in stock market history performance. Like it's very rare. So yeah, sometimes you just gotta appreciate it. Sir, ma'am, I guess. I am gonna get out of here. I will get out a market outlook video. I'm just really glad my mouse actually started working again today. That's fantastic. And we'll see how we do close. I wouldn't be shocked if we had a pump. It looks like we were trying to curl up here. The fact that we're actually doing it about an hour and a half before close kind of makes me think we would wind up dropping as we're trying to kind of bounce here over the past hour and a half. I think we might be. I think we might be set for a sell down here in the last hour and a half, hour 15 minutes, I guess. Alrighty, pleasure chatting. Always feel free to come back. Always feel free to talk. Always glad to have people talk to about anything. You can talk sports if you want. But have a great weekend. Take care, off hunters.